US stock market traders appear hesitant at placing big bets ahead of today's highly anticipated speech by Fed Chair Powell, whose comments will pave the way for either the extension of the bear market rally or the sharp correction lower. In this report, we aim to present the recent fundamental and economic news releases that impacted the US stock markets, look ahead at the upcoming events that could affect their performance, and conclude with a technical analysis. The market is expected to look for further clues regarding the Fed's intentions in Fed Chair Powell's speech later today, as on the one hand there is strong expectation that the bank will slow down its aggressive rate hiking path. Yet, on the other hand, a number of Fed policymakers, including St. Louis Fed President Bullard and New York Fed President Williams, stated that the work of the bank in curbing inflationary pressures in the US economy is still not over. Should the Fed chairman actually maintain a confident hawkish tone in his speech, we may see the USD getting some support, as that may make traders reconsider the expectation for a slower pace of rate hikes by the bank and US equities retreating to lower ground. Should, on the other hand, however, the chair mirrors the contents of the latest Fed meeting minutes report and side with the substantial proportion of policymakers that favor the slowdown of the rate hike pace, we may see the dollar weakening and the optimism engulfing stock market traders, causing another bear market rally. Apple, the information technology giant, famous for its iPhone series, iPad and iMac devices, was in the reds yesterday, closing the day near the 141 mark after falling by more than 2% intraday. Apple shares trade significantly lower by more than 22% on a year-to-year basis, while its 52-week trading range spans from 129 to 182 per share. The market backdrop for Apple turned darker after a major protest erupted in world's biggest iPhone plant, operated in the province of Jeonju by Foxconn, which put extra pressure on the supply chain problems Apple has been facing over the past couple of months. Workers took the streets as their bonus payments were delayed after Foxconn promised to compensate them accordingly for working on the production lines, as the manufacturer operates under a closed-loop system in an attempt to limit the spread of the COVID virus. Delays of its flagship iPhone Pro is seen as another blow for the tech giant, as it has been struggling to meet production targets, which have been impeded by prolonged COVID lockdowns in China. Analysts project that the company will face significant downside risks and foresee a decrease of more than 15 million iPhone shipments should the situation accelerate further. The Foxconn plan accounts for 70% of iPhone production globally, according to estimates, and even though Apple started diversifying production in the US, India and Vietnam, it is still heavily exposed in China. Hence, from our standpoint, the company is expected to face more headwinds since the supply chain disruption stemming from the protest and the prolonged extension of the draconian zero-COVID policy measures enforced by the Chinese government won't be easy to bypass and are expected to weigh on the company's share price. The next test for US stock markets will be the employment report due out this Friday, where, according to forecasts, the US labor market is expected to lose some of its tightening. Should the scenario materialize, we would expect the weigh on the dollar and in turn provide a floor for the equity section next advance. Even though the chairman pointed out in a past speech that the central bank expects to see a rise of unemployment close to 4%, reflecting the slowdown of economic activity given the fast pace of rate increases, the labor market has yet failed to show those very signs. The uptick of the unemployment rate to 3.7% at the last release acts as a stepping stone towards the projected path. However, other key indicators such as the initial jobless claims figure still hover around the 250,000 range, which is considered relatively stable by historical standards. Thank you for watching.